I will be using illustration 8.10 in your chapter to specifically show bank statement reconciliation with numbers. So let's take a look. The bank statement of Laird Company, which you can access online, shows a balance per bank. So I'm going to highlight that of approximately $15,000 as of April 30th. On this date, the balance of cash per books is significantly lower. So here's the two numbers that you need. And actually, when you start bank statement reconciliation, either line them up side by side so you have two sides, or start with that one, then skip a significant amount of room, and then do balance per books. It doesn't matter which side is located where. From the foregoing steps, Laird determined the following reconciling item for the bank. How do you know which side to go to? It really depends. When you're reading an item, think about it. Does this party already know? If they already know, there's a good chance you don't need to do anything. If they already know, they already updated their records. It's the party that doesn't know yet, and that's the time that they found out, then you have to update their records. Okay, so for example, deposit in transit, we deposited on April 30th, but the bank will get to know in May. Therefore, they don't know yet. So we're going to go ahead and speed up the deposit and say we're going to add it to the balance per bank. What about outstanding checks? Same idea, but the opposite direction. So we wrote the checks and we recorded them. We already know. The bank doesn't have a clue. Once the bank gets the checks, they will have to subtract them because we used the cash. That's why we're going to speed up time on the time machine and subtract all the checks at once. And then we, for bank errors, we have none. How about the other side? We have reconciling items per books. We had an other deposit, so it was an electronic receipt that we got from the customer as a payment on the account. So we just read it in the statement that the receipt was made. That's why we're going to go ahead and recorded it as our cash. There were other payments that we initiated in April. Therefore, since we initiated them, will be very similar to writing a check. We already recorded them, so they are in our books. No reconciliation is necessary. It's not a difference between the two. However, we do have other unrecorded charges. For example, we had a return NSF check in April. So a customer wrote us a check as a payment for accounts receivable. When we got the check, we added it to cash. We reduced our receivables, thinking it was collected, and added it to cash balance. Well, now we have to take it out because the bank said there's no money for that. And now we're going to just write a letter to the customer asking to remit the payment again. Debit and credit card fees, those seem to be significant. We had to pay $120 and then an additional bank service charge of $30. So these are all subtractions. We also had a company error. A check for $143 was correctly written for $1,226 and was correctly paid by the bank. However, when we recorded it in the books, we happened to transpose the last two digits. So the books are wrong and the check is okay. So we subtracted too much in our books. We're going to add back $36. Now, what do we put together the statement in this format? That's how it's supposed to look. Again, either one after the other, side by side. So we have cash balance per bank, cash balance per books, and this item must agree. So this is your true cash balance that will be recorded on the balance sheet as your cash. Now we have to do one more significant step, because if you look at the cash ledger right now, you will have this amount. Because the reconciliation was done in Excel or white piece of paper, it's not part of your official accounting system. Software system. So you'll have to update the records in the books, in the software, for all these items. And I would say do a journal entry per line, unless they're very much related. It's easier to keep track of them that way. And then if you think about it, When we add to cash balance, think of it as debit cash because it's in addition to cash. And then when any of them that says less, that's a credit cash because you're trying to reduce your cash. Okay, let's take a look. By the way, almost forgot. There's nothing that you need to do with the bank side. There's no journal entries. The bank will take care of everything all the time. And even if there's an error, you might send a letter to the bank, you might call them, but you cannot do anything with bank's books. It's their side. Okay, so let's take a look at the actual journal entry. So for the electronic funds transfer, we got cash. Remember I said it will be a debit. And then it was a collection from a customer. That's why we had to credit accounts receivable to record that transfer. Okay. How about the book error? Remember, the check was correct, but we did mess it up when we were recording it in the cash disbursement ledger. As a result, we have to add back or debit $36 in cash and reduce our accounts receivable. NSF check. Okay, so NSF check, remember we thought we collected cash. Now we have to take that cash out and reinstate it back as an accounts receivable. So with this one, students mess up a lot, unfortunately. They write out as a debit to NSF check, and we don't have such an account, so it has to be reinstated as an account receivable. Okay, how about the bank charges? Since we have two charges, but they're the same type of transaction, you can go ahead and combine the two. So it will be bank charge expense, or you can put miscellaneous expense as well. As long as it's expense, I'm okay with that. And then credit to cash. So as a result, if you look at the cash ledger right now, this is the balance we started with, and through the journal entries we were able to change it to the correct balance that we wanted to.